Hello everyone, I'm Abhishek Chinchalkar, Head of Education at FYERS. In this video, I will talk about the MCX iCOMDEX base metal futures contract, which is scheduled to commence trading from the 19th of October 2020 onwards. We shall talk about the various aspects of the iCOMDEX index, including what are its constituents, how the index derives its value, the contract specification on the index, and the historical price movement. With that, let us get started. First of all, what is the iCOMDEX base metal index? Well, the iCOMDEX base metal index is an excess return index. What this means is the returns that are generated by this index are based not only on the price movements of its individual components, but also by the profits or losses that are realized by rolling over the individual commodity futures contract from the front month to the next month. Put it in simple words, the returns that are generated by the iCOMDEX base metals index is equal to the commodity price return plus or minus the rollover yield. The MCX iCOMDEX base metal index consists of 5 base metals whose future contracts are actively traded on the MCX. These metals include aluminium, copper, lead, nickel, and zinc. The iCOMDEX base metal index is the weighted average of the individual iCOMDEX base metal indices, namely aluminium index, copper index, lead index, nickel index, and zinc index. Data for this index is available from 31st December 2015 onwards, when the index was assigned a base value of 10,000. Now, let us briefly talk about how the contract value is derived. Let us start with individual base metal indices first. Each of the individual base metal indices derive their value from their respective front month base metal futures contract. Keep in mind that only the front month futures contracts are taken into consideration for calculating the value of the individual metal indices. For example, the aluminium index derives its value from the front month aluminium futures contract. The copper index derives its value from the front month copper futures contract, and so on. Let us now focus on the iCOMDEX base metal index. This index derives its value from each of the 5 individual iCOMDEX base metal indices. Each individual index is assigned a certain weight within the iCOMDEX base metal index. Finally, the iCOMDEX base metal futures index is derived from the iCOMDEX base metal spot index. We will now discuss in detail about the individual base metal indices, the base metal spot index, and the base metal futures index. Let us start with the individual base metal indices first. As said previously, individual base metal indices derive their value from their respective base metal front month futures contract. Historical and current price data for each of these indices can be viewed on the MCX website. You can also download the historical price data of each of these indices from the MCX website. Daily price data is available dating back to 31st December 2015 when each of these indices were assigned a base value of 10,000. Let us now talk about how the value of each of these indices are calculated on normal days. Why normal days specifically? This is because the calculation is slightly different on normal days and on days where the index future rollover occurs. For our illustration, let us take the example of copper index. The current session value of the copper index can be calculated as the value of the copper index in the previous session multiplied by the current session price of copper futures and then divided by the previous session price of copper futures. Remember, only the front month copper futures prices will be taken into calculation. So, let us perform a sample calculation now. What is the value of the copper index for 12th October? Well, the value can be calculated as the previous session index value, which is 11,884.87, multiplied by the current session copper futures price, which is 527.90, and then divided by the previous session copper futures price, which is 528.10. So, the copper index value for 12th October is 11,880.37. This is how the value of each of the individual indices is arrived at on normal days, that is, on days other than rollover days. Let us now focus on a couple of important concepts. The ones that are relating to the expiration of a contract and the rollover of a contract from front month to the next month. Let us start by first talking about the individual base metal futures contracts. We know that each base metal futures contract expires on the last trading day of the month. Meanwhile, the staggered delivery period for each base metal futures contract begins 5 sessions before the expiry of the futures contract. Let us now focus on individual base metal indices. The contract rollover lasts 2 sessions and begins 2 sessions prior to the start of the staggered delivery period of the individual base metal futures contract. Meanwhile, the last trading session of the base metal index futures contract is 1 session prior to the start of the rollover period. I am sure that this explanation sounded a little complex, but don't worry. Here, we shall simplify it using a sample example. At present, for individual base metal futures contracts, the front month contract is the October contract. The individual base metal futures contracts expire on the last trading session of October, which happens to be the 30th of October. The staggered delivery lasts 5 sessions and begins 5 sessions prior to expiry. In other words, the staggered delivery period lasts from 26th October to 30th October. The rollover period lasts 2 sessions and begins 2 sessions prior to the start of the staggered delivery period. In other words, the rollover period lasts from 22nd October to 23rd October. Finally, the base metal index futures contract expires 1 session prior to the start of the rollover period. In other words, the base metal futures index contract expires on the 21st of October. Now, let us talk about the assignment of weights on rollover days. As you know, the rollover days lasts 2 sessions. On the first rollover day, the front month contract and the next month contract would be assigned an equal weight of 50%. However, on the second rollover day, the entire weight of 100% would be assigned to the next month contract. Let us now look at the calculation of individual indices on rollover days. Let us again take the example of copper. On rollover days, the value of the copper index for each session would be calculated as the value of the copper index on the previous session multiplied by a fraction. Now, the numerator of this fraction will be the summation of the current session weighted average price of the front month and next month copper futures contract. On the other hand, the denominator of this fraction will be the summation of the previous session weighted average price of the front month and the next month copper future contract. So, focusing on the numerator, the expression on the left is the weight of the front month contract multiplied by current session front month copper futures price. Meanwhile, the expression on the right is the weight of the next month contract multiplied by current session next month copper futures price. Now, focusing on the denominator, the expression on the left is the weight of the front month contract multiplied by previous session front month copper futures price. Meanwhile, the expression on the right is the weight of the next month contract multiplied by previous session next month copper futures price. Let us understand how to apply the formula using a real example. Let us again take the example of copper. But instead of October, let us talk about the September 2020 contract. In this case, because we are talking about the September 2020 contract, September is the front month contract while October is the next month contract. For the month of September, the rollover dates were 22nd and 23rd, as shown using the highlighted yellow region in the table. Let us now try to calculate the value of the copper index for 22nd September, which is the first of the 2 rollover days. The copper index value on 22nd September is equal to the copper index value on 21st September multiplied by a fraction. Using the formula that we spoke earlier, the numerator of the fraction would be calculated as the front month weight of 50% multiplied by the front month copper futures price on 22nd September, which is 531.35. This product would then be added to the product of the next month weight of 50% multiplied by the next month copper futures price on 22nd September, which is 524.70. Using the same logic, the denominator of the fraction would be calculated as the front month weight of 50% multiplied by the front month copper futures price on 21st September, which is 524.95. This product would then be added to the product of the next month weight of 50% multiplied by the next month copper futures price on 21st September, which is 520.10. So, The value of the copper index on 22nd September is 11,808.35. This now becomes the base to calculate the value of copper index on the second of the 2 rollover days, that is 23rd of September. If you closely notice, on the first rollover day, an equal weight of 50% is assigned to both front month and next month copper futures price. However, on the second rollover day, entire 100% weight is assigned to the next month copper futures price. Let us now focus from individual base metal indices to iCOMDEX base metal index. Let us start by talking about member weights. For the year 2020, zinc occupies the highest weight of 33%. Next is copper, which occupies a weight of 30%. Combined, these two metals account for nearly 2/3 of the index. Meanwhile, nickel and lead account for 15% and 13% respectively. Lastly, aluminium accounts for the lowest of the weight at around 9%. Keep in mind that these weights are not fixed throughout. Instead, the weights would be rebalanced annually and will become effective before the start of the January roll period. The rebalanced weights would be announced 3 months before the end of the year, that is in October. You may wonder, how are these individual weights arrived at? Well, there are two factors based on which the individual weights are assigned. The first factor is liquidity, which accounts for 75% of the weight. Liquidity refers to the total traded value of the respective commodities over the course of the last 12 months. The second factor is the physical market size in India, which accounts for 25% of the weight. Physical market size consists of production and imports of the respective commodities that are a part of the base metals index. Let us now discuss about how the iCOMDEX base metal index values are calculated. At first, the formula may look a little intimidating, but trust me, it is really not that complex. So let us start discussing about the formula. The base metal index value for one session can be calculated as the base metal index value on the previous session multiplied by the summation of the weighted average of the current session individual base metal index values, and then divided by the summation of the weighted average of the previous session individual base metal index values. If you closely observe each of the expression in the fraction, you will see that it comprises of two components: the individual base metal index value and the weight of the corresponding metal within the index. The only difference between the numerator and the denominator is that the numerator consists of index values that belong to the current session, while the denominator consists of index values that belong to the previous session. Let us try to understand how the base metal index value is calculated using a real example. Notice the first of the two highlighted regions. This represents the value of the iCOMDEX base metal index on 9th of October. But how exactly is it calculated? Well, the index value on 9th is equal to the index value on 8th multiplied by the summation of the weighted average values of individual indices on 9th October and then divided by the summation of the weighted average values of individual indices on 8th October. If you closely observe the numerator, you will see that each colored expression is the product of the individual index value on 9th of October multiplied by the weight of the corresponding metal in the index. Each of these 5 products are then summed together. Similarly, if you closely observe the denominator, you will see that each colored expression is the product of the individual index value on 8th of October multiplied by weight of the corresponding metal in the index. Each of these 5 products are then summed together. In a similar manner, we can calculate the weight for 12th of October or for that matter any other period. The logic remains the same. Finally, let us now talk about the iCOMDEX base metal index futures contract. As you shall be aware by now, the underlying for the iCOMDEX base metal index futures contract is the iCOMDEX base metal spot index. The futures value is calculated as the spot value of the index plus or minus the cost of carry. The MCX iCOMDEX base metal index futures contract will go live from 19th of October 2020 onwards and will be available for trading. Here are some of the most vital contract specifications of the MCX iCOMDEX base metal index futures contract. The lot size of the contract is 50 and the tick size is 1 rupee, which means a 1 tick move in the index will lead to a profit or loss of 50 rupees. At the present index value of around 12,000, the total size of the contract per lot is approximately 6 lakh rupees. The MCX iCOMDEX base metal index futures contract will be monthly contract and will be settled in cash. At any point in time, at least 3 contracts will be available for trading. The margin that would be needed to trade would be equal to a minimum of 5% or span, whichever is higher. The final settlement price would be based on VWAP of the underlying constituents between 4 PM to 5 PM on the expiry day. The expiry day would be one session prior to the start of the rollover period, while the rollover period would last 2 days and would start 2 trading sessions prior to the start of the staggered delivery period of the individual metal futures contracts. Let us now briefly talk about the advantages of the MCX iCOMDEX base metal index futures. As already discussed, the MCX iCOMDEX base metal index futures is an excess return index that would generate returns not only based on price movements of individual constituents, but also based on the rollover yield. Because the index comprises of 5 metals, it offers a greater diversification over the individual base metal futures contracts. Also, as the index is an average of 5 components, it will experience less volatility than that experienced by individual base metal futures contracts. Unlike base metal futures contracts, the MCX iCOMDEX base metal index futures would be settled in cash. Hence, there would be no worries relating to taking or accepting physical delivery. The MCX iCOMDEX base metal index futures is ideal for hedging exposure in industrial metals. The MCX iCOMDEX base metal index futures will have lower margin requirements compared to individual metal futures contracts. As industrial metals are linked to the health of the economy, this index can be used as a proxy to measure the economic health of the nation. This table here compares the total contract value of the MCX iCOMDEX base metal index futures with each of the other individual base metal futures contracts. See that the MCX iCOMDEX base metal index futures has the lowest total contract value of all the contracts. And this means lower margin to create positions in the index. The chart here compares the historical performance of the MCX iCOMDEX base metal index with that of the individual base metal indices. See that each of these indices were assigned a base value of 10,000 on 31st December 2015. The green shaded area shows the performance of the MCX iCOMDEX base metal index. This chart here compares the historical performance of the MCX iCOMDEX base metal index with that of the MCX iCOMDEX Bullion index. See that both these indices were assigned a base value of 10,000 on 31st December 2015. We are happy to inform that the MCX iCOMDEX base metal index futures contracts would be available for trading on our FYERS platform from 19th October onwards. You can now trade the index from any of our apps. Also, we are happy to inform that we would be offering free brokerage on the MCX iCOMDEX base metal index futures till 31st December 2020. Well, that is all that I had to say in this video. If you liked our video, please click on the like button below. Also, hit the subscribe button to subscribe to our YouTube channel and the bell icon to receive regular updates from our side. Thank you for watching this video. This is Abhishek Chinchalkar signing off. Wish you a happy trading.